The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. on Friday morning. We have 24 minutes until the start of trading, and it's going to be an interesting one, folks, to say the least. I'm not sure where we're going to go today, but it's going to be an interesting Friday in the market. Talk about an interesting open coming up in 24 minutes. Right now, you get the S&Ps up 11 points, trading at 42.05. All the attention this morning. Non-farm payrolls for the month of April. Doesn't get much bigger of a miss. 266,000. Expectation was for 1 million. One of the analysts out there had a number of 2.1 million. How's his morning or her morning going this morning? 2.1 million jobs, not so much. 266,000 for the month of April. There's going to be a lot of discussion of why. That's the real question. It's all speculation at this point, folks, and how it plays out. We'll see where we go from here, but that's a big miss. We got a lot of jobs to make up, folks. We got about 8 million jobs to make up. If you're talking about 260,000 jobs, folks, that's 2.5 years on a monthly basis just to get back to 8 million jobs we've lost, let alone supposedly supposed to be growing over that time, right? If it takes us a couple years to get back to that same level of employment, we're still below where we would have been because you're supposed to be growing as the population grows every month. So we got a lot of jobs to make up, especially when you look at where we were last month in terms of almost 1 million jobs added in the month of March. We pull back in April. Now, we got a long way to go in terms of this vaccination and really reaching anywhere near a level of herd immunity. There's still cases spreading, could be weighing on the economy, could be some of it. Stimulus, too much stimulus, that's going to be said out there as well. I'm sure there are instances of that occurring, whether that's a persistent theme that's the biggest impact on these numbers. And of course, the real question, how it impacts the stimulus of the Fed, bond buying, stimulus, interest rates, etc., inflation, of course. S&Ps positive by 9 points, trading at 42.04. You see the action, pretty muted reaction for a pretty substantial miss on the number. NASDAQ 100 really pops higher. Tech stocks, we have yields lower on this number in a big way. Tech stocks, NASDAQ 100 giving back some of the gains, though. We got about, what are we at now? 21 minutes until the opening bell, and we just dropped from a spike high of 13,818. We've given up about 80 points from that run, 13,736 right now. The Dow, the weakest of the indices right now, negative 36 points after the Dow had accelerated to all-time highs. Folks, that was an all-time high print. Basically, right on the jobs number, 34,560 on the futures, and we get the Russell right now flat at 2240. Crude market pulling back. Talk about a number we got Wednesday, 66.76. We're back, still sitting at about $64 on crude. Not a bad number. Gold contract as yields spike lower. Gold getting a bid. Gold up $15 at $18.31 this morning. We spiked to $18.44. Silver right now, a spike as well, but it gives it all back pretty quickly to $27.80. We're back to $27.44, and we'll jump to notes and bonds. We'll see. Where does the trend hold? The market's kind of giving back that first spike. Interesting action. 133.16 was the spike. You almost spiked up a full point, folks. Let's put this on a 1-minute chart just to see the real action. It was an instantaneous spike, and since then, every minute that passes, bonds actually trading lower. Right now, we're looking at a yield of 1.551%. I think when I did the 9 o'clock update, we were sitting at 1.52%. You just had the 10-year tick down a few ticks. We'll see where we go from here, folks. Going to be interesting action. Let's get into the numbers of what we're talking about here. Payrolls, 266,000 for the month of April. Now, what's going on here as well is you had a downwardly revised number from March. So March now only at 770,000. I think we're above 900. So I think that's a revision of more than 100,000 downward from March. I think there was a slight revision upward for February. Nonetheless, revisions negative as well. So you get negative revisions and you get a miss of about 750,000 jobs. So net, it's a bigger number than even the miss that you see on the top line number. Unemployment rate edging up. Get that, folks? Unemployment rate going up right now. Not sure that we're supposed to see rising unemployment as we come out of this pandemic. You almost have to chuckle a little bit. Not amusing in the least. But boy, what's going to happen to the market if we get rising unemployment when we're supposed to be coming out of this thing? We got 8 million jobs to make up. You see the numbers in terms of the jobs. 266,000 was the number added. We were just at 1 million. I mean, that's not a trend, folks. It looked like it might be the case. The number hoping it might be the case, indeed, when we saw the numbers today, but quite a setback. There's really going to be a lot of pressure on the May numbers when we get into June, folks. May numbers, June and July. President Biden himself, July 4th, right? America is supposed to open back up. Well, we got April numbers now. We're going to get May, June, and July. And if we get numbers like this, folks, I don't know where we're going to go, but the market's going to be a little freaked out because this was not the expectation at all. And the real balance here is how stimulus plays into things, how the Fed and their impact on the market, right? Are they going to now delay any type of waning of the bond purchasing they're doing? Are they definitely, I mean, they're definitely not worried about inflation like they were. That's probably going to get scaled back. That's why you're seeing bonds go lower. That's why you're seeing the tech stocks rise. It's quite a world when you miss by almost 1 million jobs and the market basically goes up. Because why is the market up right now, folks? The market's up right now because of stimulus. It's up right now because of low interest rates and the ability to use capital like that. And that's what you're seeing in some of those tech stocks. Pretty remarkable. We'll see where we'll go from there. But yeah, Jerome Powell just last week, as they put out that the economy likely reflects a combination of skill gap, childcare obligations, and lingering virus fears. There's only going to be so many months left, folks, that these fears are really persistent. Hopefully, as the vaccinations continue and we come out of this, that's when it's really going to be so important to say, hey, wait a second, childcare obligations still persisting, right? Schools not quite open yet. I imagine that is over by the end of the summer. So you're going to have kids back in school. Hopefully, it should be. Kids got to get back in school, folks. I think that's a persistent theme that spans partisan divide in a big way. Kids got to get back in school. Parents got to be able to go to work. Childcare, so important to getting people back to work. But that's all going to happen in the next 2 or 3 months. So unless we get a number like 5 million jobs added in the next couple months or something like that to completely catch up, we have 8 million jobs to add to get back to where we were. Now imagine we got 8 million jobs to add. It might even be a little bit more than 8 million just to get back to where we were. But we are now approaching 15 months after that date. So you're supposed to see a rise as the population grows and time moves forward. So that's just to make it back to status quo prior to COVID, let alone if you're going to incorporate some type of growth in that number over 1.5 years to 2 years as we come out of this. Staggering number, surprising number. We'll see where we go from there. And yeah, I mean, they talk about in here whether the battle is going to be states, right? Talking about potentially tying it to the stimulus. Montana's trying to lure people back to work in here. They talk about a $1,200 payment if they stop collecting unemployment benefits and work for 4 weeks. South Carolina plans to terminate all federal and pandemic-related jobless benefits at the end of June. It's an interesting one, folks, to say the least. That kicks off Friday. Trading, tech stocks trading higher, especially interesting on the heels of what we had yesterday in terms of really the Dow showing continued strength today, kind of a reversal of the trends that we've seen. Tech stocks had pulled back pretty substantially. You put the tech NASDAQ 100 on a daily. I mean, coming into yesterday, we got a little bit of a reprieve, but we were just at 14,064. And yesterday, folks, we were trading as low as 13,388. Well, guess what? We're solid almost 400 points above that level right now. NASDAQ, 13,755. Stay tuned, folks. We'll be right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got about 12 minutes to go until the opening bell right now. Market's pretty much sitting with they were as we traded right off of the jobs number at 8:30. Bloomberg with some great analysis. I'm going to pull up just a couple of tidbits that they have going on within the jobs number themselves. So a few interesting stats coming out of here now. When you look at the breakdown, it's been talked about many times, right, in terms of those less well off have been hurt the hardest during this. You look at now this is looking at right here, talking about the breakdown in education levels in terms of outstanding shortfalls. So this is outstanding job losses from where we were prior to COVID. Bachelor's degree or higher, we're basically almost back to where we were prior to COVID, folks. Those jobs have been reclaimed. A lot of those jobs were reclaimed pretty quickly during the pandemic, right? A month or two, maybe businesses quickly facilitated the ability for employees to work from home, brought them back in that capacity. Maybe they brought them back quicker than a lot of other less skilled workers for the ability to have technology, right? To be able to work from home with that technology versus uneducated, working with whatever it is, just not able to do the same thing. Oh, now where? They just scrolled on me. There we go. Less than a high school diploma, more than a 10% gap still persisting. High school or no college. High school with no college, 7.8. Some college or associate, still down 7.5, just an absolute huge gap. And then you get into a bachelor's degree or higher, basically almost flat. That's just a very enlightening statistic in terms of the divergence between those two classifications. And what else? We had one more stat to get in there. Yeah, how about this one? Teenagers, right? So then you go to the exact bottom line of that. You actually get below when you speak about education. You get into teenagers who should be in high school at the time. Employment among Americans aged 16 to 19, 1.4% above. The divergence, not dichotomy, the divergence across the board is just astounding, folks. When you look at teenagers increasing, so they're greater employed from prior to COVID, but then once you get into those who are very uneducated, whether it's no high school diploma or a high school diploma, no college, or even any part of college, some harsh numbers there on the jobs number in a big way. Okay, so that's the jobs number. We still have some earnings going on, and let's jump into it with DraftKings this morning. DraftKings out with their numbers. DraftKings raises full-year guidance, expecting a return in sports. We're almost there, right? Sports, they're firing on all cylinders right now. You think about when we've had the progress we've had with vaccinations, you combine in the testing that they have and something like that, seems like sports should really be able to fire on all cylinders coming up. Sports betting company said it had 1.5 million monthly unique paying customers. It's a big number when you talk about paying customers. The company also raised its fiscal 2021 revenue guidance from 1.05 was the number. They up it by 100 million to 1.15 billion from, excuse me, let me reset that. Their number previously was 900 million to $1 billion. They're now above it at 1.05 to 1.15. DraftKings, 36 cents versus 42. 312 million, quite a beat on revenue. That's what you want to see. Don't worry about those profits. If you're beaten by revenue to the tune of like a 33% increase over what the market was looking for, DKNG is their symbol. And guess what? You're going to open about $2 higher today. Yeah, there's their chart, 53.35. Excuse me, a little bit higher. All things considered, though, the stock's in quite a little pullback here. So we're going to open basically at 53.40. You're talking about just under the 50% pullback we've had. Talk about some volatility. We were trading at 65 back in October. You're going to be trading at $53 right now, and that's correlating almost to the high we had in September back there in DraftKings. We'll jump over to Penn, one of the other big gaming stocks out there. Penn up a bit probably on that as well. Penn up to 85.31, trading lower, but this stock, man, you talk about volatility as well. Getting a little bit ahead of itself. Penn, now this is, they have a partnership, or they own Barstool Sports. They were up to 142. You're back to $85 this morning. You're not far off from where we were back in September. These equities, strong equities, gambling ain't going anywhere, folks. It's only going to explode. It's always been around. It's now just becoming legitimized. And these will be two of the leaders out there. They really will. You know, there's going to be broad spectrum of room in this industry. But when you think about the reach that a company like Barstool Sports has, and you think about the demographic of the people they reach, doesn't get much better than that. Great acquisition by Penn to scoop them up when they did. And then DraftKings, the leader out there in a big way as well. All right, S&P's up about 9 points right now. We'll jump into a short-term chart, take a peek. Giving back some of that spike gain we got. We're now at 42.02. We were up to 42.14 initially on that number. You got the Dow off 62 points right now. We're making pre-market session lows right now, 34,380. We got about 6 minutes to go until the opening bell. We'll jump to gold. Gold waning some of the gains we got. A little bit of a reversal across the board right now in terms of the initial move. We're going to see what happens here. Definitely a reversal across the board. You look at gold giving back. We're off. What is that? We're off a solid $16, $17 off the spike high. And notes and bonds telling the story as usual. The 10-year spikes to 133.16. We've given up a solid 18, 19 ticks right now from that level. 132.29. I believe that spike higher in price correlated to a spike low in yield of about 1.51 or 1.52%. We're now trading about 1.55% the yield on the 10-year. Okay, let's jump around to what else we got going on in the market with stocks making moves. Beyond Meat out with their numbers, I believe last night after the bell, 42 cents a share, more than double the 19 cents loss that they had. Yeah, that's a loss. 42 cents versus 19 cents loss. Revenue missed forecast. Company saying the pandemic has dampened both retail and restaurant demand. How does that happen? Retail and restaurant? Hasn't like the retail grocery store been on fire? Did people just stop buying Beyond Meat when they were stocking up on the essentials? Nonetheless, Beyond, this one is like quite a story, folks. Beyond, check out that run. We're down to 107, so you're down $12. You're down about 10%. But boy, it's been a quick run from 221. We're going to open today at 107. If you're on margin, all your money's gone, all of it, period. And you owe some cash, even at that, from 221. And look at, we'll put this thing on a 3-year weekly. Folks, be careful. I remember when this thing got ahead of itself right out of the gate from 45 to 239, and we were comparing it, my dad and I, on air, to the likes of Tyson Foods or something like that, saying, folks, you can't be worth this much money when a company like Tyson or et cetera is going to have a similar product. They already have the entire distribution supply chain, et cetera. I mean, this is a real consolidation with the lower boundary line we're going to test of like 107. It's nothing stopping this thing from going right down to the lows we have of $48 or $45 on this equity. So we'll see where they open, not what you want to see in terms of blaming the pandemic on people not stocking up on their food. That's not the case, folks. People are stocking up on plenty of food right now in retail. Restaurants might be a different case, but if they're talking about dampening their retail presence, at a time when people just love shopping for groceries. I don't know how that plays out. Peloton out with their numbers as well. How about $165 million for the recall of its treadmills? And it also cut its sales and profit forecast for the current fiscal quarter. They reported smaller than expected loss for the current quarter. Not really the important stuff, right? As well as beating the revenue. And they are positive. Now, they've been pummeled because that news is already out there. Now, they're up about $5 this morning. There's a weekly, though, right? My goodness. The 50% pullback in the entire move, and that's only the entire move when you go up to October, okay, is $78. We're going to open at 89. Okay, so that 382, we've bounced a couple times. That's going to be your next resistance level, all right? Support turns into resistance, folks. Resistance turns into support. Peloton bouncing off that 382 on 2 occasions back in November. Also back in March, we're now going to be bumping up to that area. There's your 15-minute on Peloton. Your numbers last night. We're going to open at about 89. Stay tuned, folks. We'll be back in 3 minutes for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we have the S&P's up by 5 points right now, giving back some of those gains. Actually, the future's just under 4,200. We'll jump over to the chart, 41.97 and dropping. We got the tech stocks giving back some of those gains as well. We're up 92 points right now. We were as high on that spike high What's the exact high? 13,818. So just like that, you give back 120 points. Look at that move. Things are accelerating. Going to be an interesting one. The Dow continuing to drop. All the markets dropping right now. The Russell down about 3 points. We'll jump to gold. Gold, giving back some of the gains. We're at 1832, and let's jump to that note market. The note right now sitting about 9 points higher at 132.31. We're about 10 ticks above where we were trading at prior to the jobs number. You jump into the makeup of where we are in terms of the shortfalls versus pre-pandemic levels by sector. Okay, by sector here. We're talking about pre-pandemic levels, not just the month. Okay, we went over previous to this where we are in terms of education. Let's take a look at where we are now versus sector. Mining and logging, that's a big miss, 11%. We got to make up from pre-pandemic levels. Construction, down 2.6% still. Manufacturing, minus 4%. Trade, transportation, utilities, down about almost 3%. Information, minus almost 8%. Financial activities, not even 1%. Makes sense, folks, right? We've been seeing it pretty early on, within almost a few months of the pandemic. Some financial services companies were firing on all cylinders with the ability to do business remotely. You have financial activities down less than 1%. Professional and business, still down 3.5%. Education and health, down 4.8%. And there's the big one, right? Leisure and hospitality, down 17%. From pre-pandemic levels, and others down about 6%. So big numbers. We'll see where they shake out. All right, let's jump to other stocks moving this morning. So we talked about Peloton. We talked about Beyond Meat. How about Roku? 8.2% in pre-market trading, putting it in position to end an 8-session long streak. 8 sessions, a long streak. Roku earned 54 cents a share for the quarter. Market was only looking for a 13-cent loss. Gotta love swinging from a loss to a profit. Revenue beating as well. Upbeat forecast. Homebound consumers continue to stream more content. Roku been particularly volatile recently with a variety of things in the news. And look at that number. They're not at $272 yesterday. You're up almost $50 from that number. You're up 16% in Roku. Still well off the highs of $486, though. You put this thing on a 3-year weekly to see the COVID lows. That low, $56. You run to $486. We pull back. And look at that spike, folks. Look at that spike. What did I just say the low was? 272? 272 was the low. And what does that correlate on the 50%? Miss it by $1 on that low yesterday. Quite a bounce just like that. The weekly bar. How's that for a tail for you? Where we make it as high that week of 346. We were low down to 272. And boy, just like that, folks, this bar could turn green by the end of the day with Roku continuing to trade higher, up 17% right now at 332. Remarkable. That company just continues to fire on all cylinders. Shake Shack out with their numbers as well. Negative action for that stock. Quarterly profit of 4 cents a share. Market was looking for a 9-cent loss. Same deal. Revenue, however, though, as in same deal as Roku, but revenue not the same deal at all. A shortfall of forecast gave a tepid current quarter sales outlook as sales in city locations and sports stadiums continue to weigh on overall results. We got some work to do still. The jobs number said it this morning. There's Shake Shack from about 106 to 94. Some context on this stock. We were up as high as 138 in the beginning of the year. We're now back to where we were and below that level of 2019. We came into COVID on Shake Shack at a price level of about 78. Shake Shack down 10%. Some big moves this morning on earnings. Cinemark, the movie theater chain, they're up a little bit pre-market. We'll see if they're holding on to those gains. They reported larger than expected loss in the most recent quarter, but revenue above estimates. The cinema chains, SNK, Cinemark, yeah, they're up 3.2% today. Let's jump to AMC as well. AMC up about 2.1%, probably with the help of Cinemark. Contributing, Square earnings last night more than doubled the 16-cent share estimate, 41 cents a share. Revenue substantially above estimates. Surging demand for Bitcoin, sparking an increase in transactions on its peer-to-peer payment service Cash App. Square, these payment companies just on fire. Square's up 5.2% this morning. 283 is the all-time high. We've been shopping around between about 200 and almost 280, the upper boundary of that consolidation on Square. Let's jump to PayPal real quick. So Square's up 5.3%, PayPal up about 0.3%. Now, it's interesting. Let's jump to Coinbase. Not quite the same at all. But Coinbase continuing to trade lower. Look at this, 250.51 yesterday. You're up 1.3% today. Now, this thing's only been public since April 14th, which is why the daily only goes back. But that is not a strong daily chart, folks, at all. Part of it having to do with I think I have that article up here somewhere. Where are we? Maybe. No, pharma. All right, I'll find it. Because it's talking about just the crypto sector in terms of Coinbase actually paying a little bit of a penalty right now by not having the likes of Dogecoin and so forth available on their exchange. Robinhood, Dogecoin is available. Coinbase, not so much. They've stuck with they've stuck with the more legitimized coins such as Bitcoin, Ethereum, and the likes. Coinbase continuing to struggle a bit. All things considered, though, folks, we're talking about, I think you're coming in at potentially about a $250 billion company at this price point. We'll jump over to the Analyze tab, jump over to the fundamentals. Yes, $52 billion market cap for that company. Not bad, sitting at $260. Interesting. What was the reference price? $250 or something like that? Pretty sure they chose that reference price thinking they would stay above that level. We're flirting with that level right now at $260. All right, markets catching a bid yet again. A little bit of a reversal from the open. You get the S&Ps at 4206. How about the tech stocks? Back at 13,706 right now. Let's check on those notes and bonds. Continuing to hold at about 132.28. Let's check on gold as well. Gold contract up about $14 at 18.29. All right, other stocks making moves, continuing it. AMC. So AMC, I didn't realize they're out with their numbers as well. Cinemark and AMC. So we took a look at it. AMC's up about 0.3%. They lost $1.42, wider than 130. The operator's revenue missed as well. My analysis, folks, would be you don't focus on anything what these companies have done the last 3 months. All you care about is tell me what the next year is going to be look like. Tell me any type of estimation of when we can expect movie theaters to be back at capacity. But guess what? They can't figure it out because we don't even know when we're going to reach that type of level in society, which is the tough part here. AMC is anticipating improved business in the summer months. However, thanks to an increase in vaccinations and a slate of big budget movies set to be released, they're up a little bit this morning. But it's going to be interesting. They're expecting a big summer, but we still got some ways to go, folks. You know, I'm vaccinated. I encourage you. It's safe. It's effective. If you have the ability, please get out and get vaccinated so we can get back to normal. But in Florida, folks, we got a lot of people who are not vaccinated still. We got a lot of cases still spreading. I don't imagine packing into a theater anytime soon. I am vaccinated, but even at 95% efficacy, I could still get a mild case of COVID potentially. I have a newborn that's only 3 months old. He doesn't have the chance to vaccinate at home. I'm going to be a little careful until the numbers especially come down around the state of Florida in particular. But we're going to get there. But movie theaters, cruises, it's a pretty tight area, not much ventilation. They're going to be one of the last areas to be packed. AMC, for some context on that stock in the long run here, I mean, yeah, we had quite a resurgence. Now you take out the Wall Street bets, Reddit. I'm going to put this back on a year daily, zoom in on the action. It keeps getting ahead of itself, folks, AMC. When you back this thing up to a 3-year weekly, we came into COVID at a price level of $7.78. Not sure it makes sense those movie theater chains are operating at a higher valuation right now, considering what's going on in the economy. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got markets getting a little bit of a lift right now. We have the S&Ps up 15 points at 4209. Tech stocks back at 13,700. The Dow, how about the Dow catching a bid, right? Up 70 points. Look at that resurgence. The Dow just accelerated over 100 points since 9:35. In the last 7 minutes, the Dow accelerating and the Russell. Look at that. Russell above where we were at about 6 a.m. this morning. Jumping to commodities. Crude up 12 pennies, catching a bid as well, 64.59. Gold contract giving back some of the gains, but still up $15 right now. And we'll jump to notes and bonds as we see this move in the market. How about almost giving it all back? You got the 10-year at 132.27. We were trading at 132.21. Coming into this jobs number, only 6 ticks away from where we were. And you're talking about a pullback of 20 ticks off the high right now of 132.28. Watch out, folks. We're going to be in for quite an interesting Friday to say the least. Let's jump around to some of those FANG stocks. We'll start it off. Amazon, they give it all back. They're down 0.2% today, even with the tech stocks trading higher. Facebook shares flat as well. Look at that pullback from 326 to 319. Microsoft shares up by almost a full percent, but we've given back $3 in Microsoft shares. Apple shares right now, biggest company in the world, flat. We trade from 132 to 129.69. Gangbuster pullbacks, folks, in a big way. Even with tech NASDAQ 100 up 102 points, you see it. All the biggest FANG stocks out there pulling back. Netflix shares up about 0.8%, holding on. We're at 503.41 as of 9:45 this morning. We're only 14 minutes into the trading day, folks. It's going to be a wild one. All right, jumping around to some of the cruise ships. Story out here. Going to be interesting to see how this all plays out, folks. You have, I think this is a Norwegian, right? Yeah, so you have Governor DeSantis signing a law. Businesses, whether asking employees or customers, have been vaccinated. Cruise ships just might start skipping the state of Florida because they're not going to be able to fill their boats, folks, if they can't do that. The CEO said Thursday it could cause the company to suspend Florida departures and move its ships elsewhere. Why? Because they're a private company and they want to do business. And they know that that rule, well, a great political talking point, is not going to allow those cruise ships to do business. At the end of the day, cruise ships have motors, propellers, and rudders, and God forbid we can't operate in the state of Florida, then there'll be other states that we can operate from. And we can operate from the Caribbean for a ship that otherwise would have gone to Florida. The CEO of Norwegian Cruise Lines. And folks, I agree. If I'm running that company, okay, I want to employ the people I'm working. And in order to do that, I have to do business. In order to do business as a cruise ship right now in the summer of 2021, you're going to have to reassure people that they're not going to get caught up in a COVID outbreak. The numbers from Florida, folks, they're pretty stark. Without any type of degree of what they're talking about, it's all but assured that you will have cruise ships where outbreaks exist. How that plays out, people don't want to do that. They're not going to pay for the cruise ships. They're not going to do business. Jobs will be lost. I don't know how this plays out, folks, but you're going to see it. They're private businesses. That's how you're going to employ people. All right? Get out there, get vaccinated, be safe, please. I don't understand the ridiculousness that some people deal with as we try and get over this last year plus at this point. But you're seeing it play out right here. And politics going to diverge, unfortunately, as has been the case. Okay, what else we got going on? How about Adidas? 150% sales hike in China despite local boycott over human rights. Always interesting how China gets in the mix with human rights and some of these companies trying to navigate that. You have Adidas sales growing in China despite a boycott by mainland Chinese consumers of international brands that have taken a stand against the treatment of Muslims in the Xinjiang region. What we're seeing here is that a lot of talk on social media, folks, sometimes overshadows the real theme going into things, as in, yeah, you might see a lot of talk about that boycott, but China's got a lot of people in Adidas. They're selling a lot of shoes over there in a big way. And let's jump to cryptos real quick. Quite a segue, but we will. I wanted to talk about this one. So you have, is it Carney? Who said this? Andrew Bailey, okay, Bank of England governor, talking about if you're in cryptos, you better be prepared to lose all your money. That is the Bank of England governor, okay? I'm going to say this very bluntly again. Buy them only if you're prepared to lose all your money. Just keep it as a risk on your radar, folks. Everything we do has risks in it. We try to quantify those risks, and then we try to use a risk-reward ratio to see where and what is the best use of our money and investments to offset the risk and the returns we might need. There's a lot of possibilities in crypto. We're seeing vast fortunes made in the crypto sector, but you're potentially going to see vast fortunes lost too. So just keep that in mind. If you're over there, if you're playing Dogecoin and Robinhood, you got to take some money off the table eventually, folks, all right? That's the only way you make money. You keep all your cash in Dogecoin until it hits zero, then all those gains that you might have had mean nothing. And you're going to see it across crypto. Now, Bitcoin is so legitimate that they're going to be the end all in terms of the crypto market. Ethereum and Ether, with the tokens going on, non-fungible tokens, that's a big player as well. The functionality of those cryptocurrencies has ingrained them in a big way. There is zero functionality for Dogecoin besides basically being a hot potato game, where I create a hot potato game and I'm going to sell potatoes, and man, are they hot, so come get some. And as long as you find somebody else that will buy that hot potato next at a higher price than you paid for it, the game continues. Guess what? The game continues until it doesn't continue, folks, until everybody realizes that hot potatoes ain't worth more than like 50 pennies and the market crashes. It's bound to happen in something like Dogecoin. Dogecoin has a market cap approaching $90 billion, folks. It has zero functionality. The whole point of cryptocurrencies is that it's either a, store of wealth, right? But you can do what you do with Dogecoin with Bitcoin. You can store that wealth, crypto, with Bitcoin in the same way you do with Doge. So all you're doing is you're speculating with Doge. While Bitcoin has functionality. You buy Bitcoin. You're then on a crypto exchange. Then maybe you use the Bitcoin, you transfer it for Ethereum. Maybe you're using Ethereum in a way as a non-fungible token. Nonetheless, you get the point, folks. Be careful. These are one of the great at risks, as in these statements from people who are managing banks for governments are some of the harshest statements out there that you have to keep on your radar, because regulations could really hit this industry. It's very unregulated at this point, but when you're going to see exchanges like Coinbase going public for $50 billion, you're going to see cryptos like Dogecoin having market caps of $90 billion. And folks, there's a vested interest for society for regulations for this, because if you start getting Dogecoin, I mean, what type of a market cap does Dogecoin need to reach before they cause a societal risk of like Ponzi-esque scheme risk? We're at $90 billion. If Dogecoin reaches a market capitalization of $500 billion, what if it reaches a market capitalization of $1 trillion? Is it okay that there's no regulation for something like that to operate, for people to plow their money into, that is basically a hot potato Ponzi scheme? As long as you buy it to the next person, it's a tough line. And then there's obviously other arguments to be made on the other side in terms of the vast technological advances that cryptos have made, the functionality they can allow for, whether it's transactions, right? Whether it's the ledger and tracking all these transactions. Folks, we're on some pretty lofty levels when you got Dogecoin $100 billion. You got Elon Musk hosting Saturday Night Live. shame on Saturday Night Live if they don't have a Dogecoin skit to kick things off, folks. And that's why you're seeing some of this run. You talk about buy the rumor, sell the news. I can't imagine Dogecoin is higher than we're at right now in a couple weeks. But guess what? People have said that forever about Bitcoin. They've been wrong. We'll see where we go. But pay attention to these types of statements from governors of the Bank of England, because you're going to start seeing them across the globe as well. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This market just does not stop. We got the S&Ps up 21 points right now, 42.1850 the high. We're trading right now 42.15. NASDAQ 100 up 133 points. And how about the Dow? Getting it all back from the losses. You spiked down to 34,380, and just like that, we're right back to where we were prior to the jobs number, 34,549. The Russell right back to that level as well, 2252. Notes and bonds, keeping our eye, actually spiking a little bit higher. We got the 10-year now up 11 ticks, and the gold contract continuing to run higher, 1837 in that gold contract. And let's take a look at Bitcoin this morning, folks. Bitcoin up $1,000. Bitcoin gets a spike on that jobs number as well. Gotta love it. 57,250. We're up $1,000 in Bitcoin. Now, interesting. Let's take a look real quick. Some of the banks, folks, it just doesn't stop on some of these banks, right? Look at these charts. Goldman, talk about a rocket ship. Back in November, we're trading at 180. We've doubled it, 100% gain in Goldman from 180 to 360. JP Morgan, you just traded from about a price point of 96 to 160. Bank of America, you traded from a price point back in November of $23 to 41. Now, I talked about Goldman Sachs. You know these banks love their trading revenue. We've seen some of these trading revenues off the charts during COVID in terms of the markets. Well, guess what? Goldman Sachs, they're unveiling a new cryptocurrency trading team in an employee memo. The bank informed its market personnel on Thursday that a newly created crypto trading desk has successfully traded two kinds of Bitcoin-linked derivatives. The crypto team exists within the firm's global currencies and emerging markets trading team. They report to Goldman partner Rajesh Kataramani, maybe? I think I nailed that one, who authored the memo. They're seeking to broaden its market presence by selectively onboarding crypto trading institutions to expand offerings. The bank also said it launched a new software platform this week to provide the latest cryptocurrency prices for new clients. Encouraging stuff across the board. Traders love volatility, folks. Crypto, there's nothing more volatile than crypto right now. But, man, we got some volatility in these markets. A lot of volatility to the upside. The Dow making new all-time highs today on quite a miss on the non-farm payrolls number, folks. Stay tuned. Going to be an interesting day of action. Basil's up next. Fast Market at 11. Live programming all day at TFNN. Stay tuned, folks. Basil Chapman is coming up live in 3 minutes. We'll be right back.